This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, we have a great show here I'm excited about. We like to bring to you various types of real estate investing. And we have a gentleman here who specializes in liens and mortgage notes. And this is an area we've touched on in the past, but not really to a great degree of detail. And I'm hoping that our guest here will be able to share some light on this subject. His name is Bob Fraser, and he's on a mission to help investors take advantage of one of the most effective and overlooked avenues of real estate investing, residential mortgage notes. As founder and principal of Aspen Funds, Bob has purchased more than 1,000 mortgage notes, earning double-digit annual returns without the risk and volatility of traditional investing options. Well, Bob, welcome to the Old Dogs REI Network.
Yes, super pumped to be here. It's awesome to be counted an old dog. And,
hey, we love old dogs here. I mean, we have young pups on the show too, but it's always more fun. It's funny. We had one guy on, and he was talking about how he was on a podcast, and he was saying, I was talking to a guy, and I go, well, I'm just kind of like the Don Rickles of real estate investing, and the guy didn't know who Don Rickles was. So it's kind of nice to have people on that can relate to the same.
Yeah, the scars count for something, don't they?
I think so. Well, Bob, I know our listeners are very interested in this topic, and I'd love for you first, just to give us a little background on yourself and where you came from and how you got into this area of real estate investing.
Sure, and I'm probably atypical because I really was not a real estate guy. I was a tech guy, and I was a tech entrepreneur and built a big tech business with venture capital in the late 90s, and raised millions of dollars, and became super wealthy on paper, and then lost everything in the crash, but really got an education. I got what I call a street MBA. They're really good, but they're a lot more expensive. And then became a professional stock market investor and trader. He did super well for a few years, and then got creamed in the 2008 crash. Oh. And so both of those scars kind of helped make me who I am, and very risk averse in one sense, but also realizing that real estate had a lot of superior characteristics compared to, the vagaries of the stock market or the tech world, and so haven't looked back since. That was in 2012.
Oh, neat. Well, yeah, it's a diverse background and definitely something. It sounds like you put together your various skill sets to create Aspen funds.
That's right. Yeah, and the key there was, finding my partner, Jim Mafuccio, who is a real estate guy, and I kind of stumbled into this lien world and getting real estate liens, and educated me, and I about fell on my chair when he showed me the models, and I said, this is too good to be true. And then I just put my IRA to work and let him work it, and just as a beta test, and made a ton of money, and realized that this was real, and we joined together and started a fund to do this, and to basically invest in notes. And so he kind of educated me in the whole real estate world. He's super, super talented, smart real estate guy. And so my background with finance and other things, scaling and systems, we're just, really put together a great team.
Yeah, that's great. Well, it had to be, I would say, with your background in stocks as a, I guess, a professional investor, you were, familiar with the risks and a lot of other aspects of investing. When you first looked at sort of that, and maybe you could kind of help me right up front too. So, what's the difference between, let's say, a mortgage note and a lien, or is it the same thing?
It's the same thing, but there's a lot of different. I mean, a lien is a note is a debt owed. A lien is a security instrument that that enforces the note. So a lien means you can't buy or sell that house without dealing with me, and the note actually describes what you owe.
You didn't pay your county taxes, and then they put a lien on the property. Is that correct?
Right. Yeah, and that's a security instrument. It means they have a right to that property. What that right is described more by the note. But yeah, a lien means it's if you go buy a house and you borrow money from the bank puts a lien on that house. It means that if you sell that house, the bank gets paid, and in order to clear title, that lien has to be released by the bank. So it's an enforcement mechanism. A lien is an enforcement mechanism to make sure that house cannot be bought or sold in any way, transacted without dealing with the lien holder. So yeah, so when we buy notes, we actually become the bank, and there's a lot of advantages. There's a reason why the tallest buildings in a city are bank buildings, right? They don't lose, and so when we buy a note, we actually become the bank. And that's why we call it being lienlords versus landlords. And there's just a lot of advantages. You ever call your bank to go fix your plumbing? You don't they don't do that.
Right.
You just pay the money, and as long as you pay the money, you can keep your house. That's the idea. So it's just much more. It fits my personality for sure. And you can scale a lot bigger. It's a lot easier to get bigger. I actually bought one condo as a real estate investment, and it was just such a nightmare for me. I mean, personally, and I think, maybe some of your listeners can identify with this. I'm kind of a white collar guy. I'm a mathematician, an analyst, finance guy, I'm not that handy. And so when I get the calls, I just didn't like it. I didn't know how to work it. And then I didn't know what I was doing with real estate, and spent too much money in this place. And then the guys tell me I need to fix it up, and I put a lot of money into it, and I end up losing money on an income investment. And that's when I figured out, liens are for me.
Oh, that's great.
Just wait, don't have to get my fingernails dirty, and take the phone calls.
Oh yeah, well, I can totally relate to that. I'm definitely one of those landlords that has to have those other guys there that know how to do that stuff. I mean, when I go in and try to do plumbing, I have to pay twice as much to repair the damage that I did. So I can relate to that.
Yeah.
Well, yeah, it seems like, I mean, I kind of know the process. You've got a bank or savings and loan or credit union, whatever it may be. They basically lend you the money. They get a deed. Of course, their name's on the deed because they hold the loan. What kind of happens there now? Some banks, maybe smaller banks, I would assume, maybe hold on to those for the life of the loan, or do they immediately market those loans? And are those the ones you're investing in,
Right.
or do they go to other financial institutions? How does
Right.
that
And
work?
this is where it's a little bit of an unknown world, which is why a lot of people don't invest in it. It's just they don't know how to, exactly what you're describing, and so they tend to stay away. But it creates a very inefficient market, which is a great place to make money. But the bottom line, so typically loans are originated mostly by banks. Those loans are typically sold. Most of the lenders package up the loans and sell them to Fannie Mae or Freddie Mac, or FHA. Some banks hold them. Other types of paper. So, for example, if you're selling your house and you own that house, you don't owe any money on it. A lot of times you may sell it to someone and you will seller finance. You'll say, well, pay me the monthly payment. So there's a lot of homeowners that have originated paper themselves. And there's a huge opportunity there. Seller finance paper where there's a carryback, seller carryback. So there's lots of sources. There's hedge funds that have bought a bunch of real estate. They put renters in them, and then they do seller financing to the renters if they prove themselves creditworthy. And so all this paper is available for sale in different venues, different avenues, and there's all over the map. You can buy first liens. You can buy second liens, depending on what your yield. You kind of pick how much money you want to make, your yield and your risk kind of profile by the kind of paper you buy. You can buy non-performing debt and repair it if you really got a lot of gumption, or it can buy sub-performing debt, and all these things come with discounts. I'll give you an example, just a couple examples to make it real. We just bought a bunch of paper from a hedge fund that bought a bunch of tier 2 areas, not inner city, but not great parts of town, kind of in between. Let's say $100,000 homes. They repaired these homes. They put renters in them. Then they seller financed this to these renters. They've got a 2-year payment track record of paying on time. Well, we bought these notes, and we bought them. They're about 10% yield notes. And we bought them at about a 20% discount. So we're getting about a 12 to 12.5% yield on this paper. These are first liens. So they're first mortgages. We're in first position. And we're getting a 12% yield. And the LTVs are around, if I recall, about 40% LTV, means we loaned only 40% of the value of the house. So uber safe and 12% yields.
Wow.
And that's, it's, how am I going to lose money? I can show you a couple examples, it's just insane. It's just a very inefficient market. And, if we have to be prepared to take the property if the borrower stops paying, but, that's not even that common of an occurrence. Here's another example. Another source of great notes is what were non-performing notes. So a lot of times in the crisis, people quit paying their mortgage, but then, they lost a job or whatever, had a health crisis, a divorce, but then they get back on their feet, as people do, and they start paying again. Well, once they get a loan modification, so what happens during the non-payment period, a lot of these guys will call the bank and say, hey, I can't afford this. Can you give me a better interest rate, reduced payment? The banks say yes. It's called a loan modification, and they're very common. But what happens as soon as that loan is modified, it becomes toxic to the bank. Banks are actually penalized for holding these kind of notes, so they sell them off. And believe it or not, we can buy these notes at anywhere from a 20 to a 50% discount. It's insane. And let me just give you a picture of how that works. This is a real note we own. It's about $110,000 house in upstate New York. The guy owes us $110,000 on the mortgage, but we paid $50,000 for it. So he owes $100,000, but we bought the $100,000 loan for $50,000. So we're getting about a 14% yield on that. On his monthly payments, he's paying $566 a month. It works out to, about a 14% yield. And if he ever doesn't pay us, I'll sell that house. I'll foreclose. I'll sell that house, and I'll actually profit. Even if he doesn't pay me, I'll profit. And here's the magic, Bill. So let's say he refinances someday, and finds a cheaper lender, or sells the house. Well, to pay me off, he's going to pay me $110,000 when I paid $50,000. I make a $60,000 profit. You tracking so far? So I make a 14% yield until I make a $50,000 profit. I'm backing up the truck and buying this stuff all day long.
Wow. Now, is that? I mean, that's amazing. I mean, you've got, you can't. Sounds like you can't lose in a lot of those.
You can't.
No. But I imagine some are higher risk.
And banks don't lose that often. That's right. There's incredible opportunities here if you can find this kind of paper, and hold it. And this guy, he's paid. I think we've owned this note for 5 years now. He's paid faithfully. I've never gotten a call to fix his plumbing. I think we had to call him once to make sure his insurance was current, his homeowner's insurance, because we need to make sure he's fully insured in case the house burns down, we're covered. But really, it's been nothing. And, we've had a number of these that pay off as well. They sell, so we make huge gains when they pay these notes off. The other thing about this, the other thing I love is that it's very protected. Because these are we specialize in owner occupied notes. So we like to buy the notes where the homeowner is living in the home. These are not investment properties. Because here's the thing, having lived through 2 recessions, okay, and with the scars to prove it, if an investor has negative equity, they're going to hand the keys back to their lender and say, "Oh, it's your problem now." And so what happens in crashes, the lenders get stuck. But if it's a owner occupied and it's your home, it's your house, your kids are in school, it's where you go to church, blah blah blah, you're not going to do that, right? If you suddenly had negative equity in your home, Bill, are you going to hand the keys back to your lender and say, "Here it is"? They don't do it. So we specialize in owner-occupied lending, and it's far more. I could tell you a whole bunch of stats. I'll spare you, but in the crashes, this stuff is far safer. So bottom line, we've liens allow us, when you can buy them right, allow us to make very high yields and very very protected with upside. So yeah.
Interesting. Now, how does somebody get a hold of one of these instruments, and what kind of investment, what sort of an average return?
Okay, well, it depends on, there's several classes, like I talked about, loan modifications, or what's called troubled debt restructures, where they weren't paying and now they're paying. Again, because the borrower is struggling does not mean it's bad investment, because you still have the lien. It's still a real estate investment. So then there's seller financed paper. So there's different sources for all these things, and we're going to provide your listeners a link. So there's a few resources there that you can check out. But the yields can go anywhere. And the other opportunity is second mortgages, which we absolutely love, second mortgages. And a lot of people are afraid of them, and I'm glad they're afraid of them, because it makes my yields higher. People stay away from this stuff. And the truth is, it's a mathematical calculation. So when we buy a note, we do very, very sophisticated underwriting. We look at every possible outcome of the senior mortgage, of the second mortgage. We look at every possible scenario of prepayment, repayment, non-payment, pricing crashes, and we come up with a price that we're willing to pay for a note, and that's what we pay. For some second mortgages, we're getting paid 20% yields, 25% yields even.
Wow.
Yeah, so they pay us for 4 years. We've made our money back, and then we still get the tail. Here's the thing, Bill, is you can kind of pick your risk profile by the note you buy. So you can decide what yield you want to make and buy notes that fit that yield and minimize your risk in those notes. There's really no such thing to me as a bad note. There's just a bad price. I'll buy anything if I can get it for the right price. If a guy who's got a terrible FICO score and negative equity in his home, but if he's paying you a 50% yield, would you buy that? Well, you very well might, especially if it's part of our portfolio. So yeah, so you can buy these notes, put them in your IRA. I've done that. You want to buy a few of them. You can buy notes. The second mortgages you can buy for as little as $1,000 or a couple $1,000 if they're smaller. The senior loans, the first position mortgages, they're going to be lower yielding. They're more well understood. A little less complicated to buy, a little less analysis required. And you still need to do the real estate analysis as well. You need to look at the property and figure out, if I have to take this back, am I going to be okay? So it's a very cool market. You can kind of pick your risk profile. You can pick your yields and manage your portfolio that way,
Can
of
you
course,
negotiate the price on those?
Yeah. Well, what we do is we bid. Here's people offer us notes. We say, well, here's what we'll pay, and after we do our analysis. Now a lot of the public websites that are out there. I mean, we buy large pools from institutions, and that's the way we bid. The retail type product available is generally there's an offer price, and you got to analyze it and figure out if it's good. We run a fund, and so we definitely recommend that for people that are unfamiliar with it, get started with a fund at least, where you can have someone else do some of your underwriting for you and manage the risk and diversify your portfolio out of the gate. So that's definitely a good way to get started if you're unfamiliar.
And how does the fund generally work? Is there does the yield fluctuate from day to day? How do you know what kind of fund to purchase? Yeah,
well, our fund has been around for 7 years. Here's the other cool thing about this fund, and this is one of the cool things we have 200 notes in this fund. Well, we have probably half a dozen of these notes pay off every quarter, right? So what happens, we have a huge amount of liquidity in this fund. So we allow investors to get their money out. If they want any quarter, they can get their money out because we have a massive amount of cash flow from redemption from loan payoffs. But our fund is 200 notes. We pay a 9% yield. 9% yield. It's paid monthly, plus an additional 20% of profits above. It ends up being around a 10.5% yield all in, and it's completely passive with full liquidity. So it's kind of attractive, and it's like I say, got a 7-year track record.
And are you always buying new notes that go into this fund, or okay? Yeah.
Oh yeah, absolutely. Anytime we get a new investor, we'll go buy some more notes and stick them in there. And anytime so it's been steadily growing, and we're always shopping. We're big enough now that a lot of investors are coming to us and selling us their notes, and so we're getting great deals, and it's super easy to get started. This fund, of course, because of SEC rules, is for accredited investors only. But if you're accredited, it's a very attractive. There's very little that gives you this kind of yield and liquidity. Right.
Well, you've been doing this for a while, and you started off, I guess, just buying individual notes, right? Before
That's right.
actually formed a company and do the fund. What kind of mistakes, did you make early on that you learned from and kind of went on from there to refine your investing?
Yeah. Well, thankfully, you learn in this market, it's kind of it can be complicated. We've learned, you need to pay attention to statute of limitations issues. You need to pay attention to lending issues. You need to be licensed. We didn't even know, like, it's actually a felony to buy a note in the state of Georgia if you're not licensed.
Really?
What? So yeah, we figured that out when we got fined by the state. I'm like, it's actually a felony. They wanted to throw me in jail as a felon, they could have. I was completely blown away. So we ended up getting licensed. So you definitely want to do your homework and make sure you don't do something that gets you. It makes you, a felon in some ridiculous law. But
sure.
But yeah, and generally, I mean, we've made a few mistakes. Buying second mortgages. In one case, we didn't understand the foreclosure laws in the state of Mississippi, and they call it the rocket docket state. You can foreclose in just a couple months, and they don't even have to notice anyway. We were never noticed. And so you make a few little mistakes. Luckily, we do all of our risk analytics, and so we don't ever we count on a 30 to 40% default rate in our portfolio, and we price based on that. So anything less than that, we're going to make money. So even those mistakes, didn't cost us too much because of our models.
Gotcha.
But yeah, there's just a lot to know. You got to make sure you do your homework.
Now, sort of on the other side, what did you do that just wow, this really works? This is something we're going to incorporate into our ongoing strategy here.
Oh my gosh, it just happened yesterday. So we bought a loan modification, a second mortgage. I think it was a $125,000 mortgage. We paid $60,000 for it. This guy was making regular monthly payments. I think we were getting a 14% yield. We bought it 6 months ago. And so he's been making regular monthly payments, can't remember what it was, $1,000 a month or something. We're super happy. All of a sudden we get a payoff request. Well, he gets it refinanced. He gets his refinance. We get paid off $125,000. I just made $60,000 yesterday. Yeah. So I'm doing more of that.
Yeah, definitely a good direction to go. That's awesome. Well, our listeners are primarily folks that are 50 years of age and older. We have a lot of younger folks too, but our focus is really toward that group. And a lot of those folks are either approaching retirement or they're already in retirement, and they're looking at their what they're going to have in their retirement. They may have a nest egg set aside that they want to last the full the full length of their needs, and or they may be somebody who wants to create cash flow during their retirement years so they can do a lot of the things that they always dreamt of doing in their retirement ages. What advice would you have to those folks that may be looking at notes and liens as a possible avenue to be able to help them accomplish their retirement goals?
I think there's so much real estate investing advice and really great avenues in real estate. I know about most of them. I've looked at most of them, and honestly, I would strongly encourage these 50 plus listeners to look at liens. They're so superior in so many ways. You actually have a more secured position. You have less real estate risk because of discounts and because of LTVs, low LTVs. You have less effort to put into these notes as far as managing them. And in some cases, you can actually get liquidity. If you own a piece of property, an apartment complex, a lot of times you're stuck for 5 years, 10 years, and as a retiree, maybe you need the money. So I would definitely advise them to take a look at liens and to start to study and learn about liens. And definitely getting in a fund is an easy way to kind of dip your toe and learn about the business. And in a pretty safe way. You give up a little bit of your yield in fees, but you sleep at night. So definitely, there's just so many opportunities in liens. And the cool thing about liens, just like real estate as well, you can be as active or as passive as you want. So if you're really trying to make money, you don't have a ton of cash, and you're really trying to make it work for you, you can buy some liens and you work the liens. And the lower quality liens you buy, you can get better yields. They're more effort. So guys, that's a sub-performing payer, this kind of thing, well, buy that, and you can buy those notes cheap, and you work them as a bank.
When you say work them, what do you mean specifically? What does that mean?
What do you mean?
To work them.
Okay, so you buy a sub-performing note. I've got a note here that my borrower is paying half of the payments he's supposed to be making lots of excuses. I'm sick of this note. I'll sell it to you, because someone who's willing to work it. So you talk with the borrower. You either figure out how to take you want to foreclose, take the real estate and fix up the real estate and flip it, or you work with the borrower to get a solution, that kind of a thing. So it's just working the note to figure out, how to get this performing and or use your recourse remedies to take the property. So it's just working the note to get it performing to the place. Obviously you want to, you can work with the borrower to do a loan modification or a settlement agreement, or get them to reinstate or pay up, or you can take the property as the lender. We have that right. So figuring all those things out and moving forward with that.
Do you sell notes too?
We sell a few. Yes.
Gotcha. Oh, interesting. Your company, it sounds like it's doing really well. The fund sounds like it's got to be pretty good size, and I'm sure you've got a team of people to make sure that it stays a good yielding fund. What's your plans for Aspen Funds, and where do you want to see your company in the next 10, 20 years down the road?
Yeah, we actually have 4 operating funds right now, and starting others. We see huge amount of opportunity to distress debt, and having been through the real estate crash and the stock market crash before that, we love distressed debt investing. We feel like we can get very good returns, very good yields, and with far less risk than in the stock market. So we want to be the alternative alts expert, alternative investments, and help retirees and others just with safe places to put their money, and that are all based in real estate debt.
That's great. That's great. Well, we have kind of zipped by here. This is great information that you're providing us, and I wanted to get another opportunity to be able to provide information. And you talked specifically about educating yourself and learning about this. We have what we call our Wrap It Up session, where I ask you a series of quick questions, and you share resources there with us. And that's one of those ways that we can help folks to get better educated in what's available out there to help them to learn more. So if you're ready, we can go ahead and move into our Wrap It Up session.
Sure.
All right. Well, the first question I have is generally favorite real estate book, but maybe there's a book that you would recommend that'd be helpful for people to learn about this whole area that we've been talking about here, liens and deeds and so on.
Yeah, I don't know anyone that's done that, written a book on that. So what got me started in thinking about real estate was the Rich Dad Poor Dad. So the old standby,
Gotcha. Yeah, that was my favorite too, and it got me going. How about favorite just general business book?
My favorite business book is probably Good to Great. Fantastic book about leadership and how to build a great business.
Excellent book. How about most valuable website for success other than your own?
I'd probably say Bigger Pockets, just tons of resources. And there's actually quite a bit of learning you can do about notes on Bigger Pockets.
Oh, that's great. How about favorite app? What's on your phone that you use on a pretty regular basis that's helpful for you?
Yeah, probably Microsoft OneNote. That's the note-taking app.
Oh, really? Okay.
Oh, yeah.
How does that work?
Synchronizes with your PC, synchronizes with all your devices, and all these random ideas I get in the middle of the night, I can type them in, and it's fully searchable. Oh, so nice.
Oh, that's great. I love it. How about favorite quote?
Oh, this is my life quote. This is from George Patton.
All right.
Who said let me see if I can get it right. He said, a good plan violently executed today is far better than a perfect plan executed next week.
Great quote. I like that. Wrap-up question. If something happened and you lost absolutely everything you had, and all you're left with is $1,000 in cash in your hand, what would you do with that $1,000 to relaunch your real estate investing business?
Oh, gosh. Again, I got to go through a third crash,
Yeah, really.
Yeah, you know what? I would buy a non-performing second mortgage. That's what I would do. And I would work that puppy. And then I'd go buy another one and work that puppy. Then I'd buy a few more and work those.
Now, if you work those right, what kind of yield are you getting out of these? And could you buy that for $1,000? I mean,
oh yeah, you can buy them for $1,000. The non-performing seconds, they're considered trash, and we specialize in non-performing seconds as well. We have some other funds that do that, and you can make, our gross margins are over 200%. So if we
really,
yes,
wow,
yes, yeah, and that's over all assets, including the ones where we get wiped on, which happens occasionally.
So you can take that 1,000 and turn it into 3,000. I mean,
that's exactly what I would do, and I would dive in as hard as I could and start working these puppies, and we sell notes to investors that have done just that. Literally, a fireman here in Denver that he's actually quit his job as a fireman, and all he does is buy notes primarily from us, I think, and he just works them. He's gotten real good at working these notes and turning them into gold.
Must be an art to that. It seems like it'd be gosh, if you could get those kinds of yields, that'd be definitely something worth learning.
Definitely.
Awesome. Wow. Well, I'm sure a lot of the folks listening, are very interested in the things that you've talked about here, and love to have you provide them some sort of information, contact information, maybe a website, email, phone number, where they can find out more about what you guys do and more about becoming a Lienlord.
Absolutely. Aspen, like the tree, Aspen Funds, FUNDS .us is our website, and we'll also provide your listeners with a link of just general resources to learn more about notes.
Oh, that's great. That's great. Gosh, this has been very, very educational for me. Great information. And I'd love, Bob, if you could just close us out here with your best old hound dog howl. Are you ready for that?
Oh, all right.
I mean, you're from Colorado. You know a lot of wolves and other things up there, right? That you can get that from. Yeah,
we just ran across a moose the other day, so.
Okay.
And a bear. Yeah.
There you go. We can do.
All right. Here's my howl.
All right.
Right. I don't know. I don't know if that was a hound dog or a moose.
I definitely, had it's kind of this mellower kind of howl. It's just kinda...
he's a laid back hound dog.
Yeah, definitely. Well, Bob, thanks so much for being on. We really appreciate it.
Thanks, Bill. It's pleasure to be here with you, and it's awesome what you guys are doing. So keep it up, buddy.
Well, thank you. I appreciate that, and I appreciate all those old dog listeners out there too for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note now, everything Bob talked about here, including links to his website and resources that he has there, as well as some of the things he mentioned in the Wrap It Up session, will be accessible in our show notes at Old Dog's website at olddogsreinetwork.com/blog. And you're going to look for the episode with Bob Fraser. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.